Good morning, class. Today we're starting a very important new topic, and this one is all about how businesses use systems to manage their accounting. It's called manual and computerized accounting systems. Now don't worry, I know it sounds a little technical, but I promise you, I'll explain it step by step. You'll see examples. You'll understand why businesses use these systems. And by the end of the lesson, you'll be able to tell me exactly how they work. The book tells us that we should understand two things. The function of these systems, that means what they do, and the importance of these systems, that means why they matter. Most businesses today use some kind of computer system to manage their accounting. But here's the interesting part. Not all systems are the same. Some small businesses might just use one simple PC. That's a personal computer like your laptop. Bigger companies like banks or international corporations might use very large and powerful systems called mainframe computers. But wait, not all businesses have gone digital. Some small businesses still use manual systems. That means they write everything by hand in notebooks or physical ledgers. Imagine that. So now let's understand how these systems actually work. All accounting systems, especially computerized ones, follow a three-step process. Step 1, input. Let's say you just sold something to a customer or paid rent for your shop. You need to enter that information into the system. That's what we call input. So input simply means typing data into the computer or writing it into the ledger manually. For example, customer name, amount, invoice number, date. Step 2, processing. Once the data is entered, the system needs to work on it. This could mean sorting the information, calculating totals matching payments with invoices, updating customer balances. This is what we call processing. The computer, or even your brain in a manual system, does the math and organizes the data. Step 3, output. Finally, we need the result. We need a report, a summary, or a statement. This is called output. Examples include a profit and loss statement, a balance sheet, a list of customers who still owe you money. So remember, class, input is what we give the system, processing is what the system does, and output is what we get back. Here, the book talks about why computerized accounting systems are so useful, especially for modern businesses. Let me ask you a question. What happens when a company has to handle thousands of transactions every day? Can they really do all of that with pen and paper? Of course not. That would take forever. That's why the main advantage of computerized systems is that they can process a lot of data in a very short time. They are also much more accurate than doing everything by hand. Computers don't get tired. They don't make spelling mistakes unless the person types it wrong. They calculate things instantly. But hold on. Computer systems aren't perfect. There's a small issue called the lack of audit trail. Have you ever heard someone say, "You never know what's going on inside that funny box"? That means we can't always see what the computer is doing behind the scenes. If something goes wrong, like a wrong balance or a missing transaction, it's sometimes hard to know where the mistake happened or who did it. That's what we mean by lack of audit trail. So that's one risk of using a fully computerized system. Manual versus computerized. What's different? Even though manual and computer systems do the same tasks, they do them differently. Let me break it down. 1. How information is stored. Manual. On paper, in books. Computerized. In computer files, digital, and can be printed or seen on screen. 2. How tasks are done. Manual. You calculate, write, and file everything yourself. Computerized. You click through a system and it helps you complete the tasks. 3. Automation. Manual. Nothing happens unless you do it. Computerized. The system can do some things automatically, like adding totals or updating balances. Let's take one example. Journal entries. These are very common in accounting. In a manual system, you would write each journal entry by hand. But in a computerized system, it's different. You don't need to write it. Instead, you click a menu option, choose New Journal or Reverse Journal, and the system creates it for you. This makes everything faster. And yes, it also reduces the chance of making a mistake. Final benefits. What else can computers do? Let's end with one big benefit. Computerized systems can be told to do things automatically. For example, want to reverse a journal? The system can do it for you. Want to repeat a transaction every month? The system can schedule it. Need totals updated the moment you enter data? The system does it instantly. This is the power of automation. It saves time. It reduces mistakes. It helps businesses grow without hiring more people. All right, class, that's the end of today's lesson on manual and computerized accounting systems. I hope it's clear now how these systems work, how they differ, and why most businesses today prefer using computers. But don't forget, manual systems still exist and are useful in small setups.